Good morning, guys. Happy Monday, and it's the start of a new week. And welcome back to Tea and Charts. This is officially our third episode for Tea and Charts, and I'm excited. Excited about everything about Tea and Charts because it's personal to me as much as it is to everyone who attends and who joins, because it's a sort of fit for me to kind of like track my consistency as a person as well, and also to build a community over time where we develop seriousness in terms of trading and having like a set principle every Monday morning to study the charts and kind of like assess our psychology and lounge a bit, just to like cool off from probably whatever stress we might have gone through during the weekend and trying to come into the market with a clean slate of mind. So today, the first part of Tea and Chats is going to be more of a lounging session. So I just want generally, we on call right now to talk. I want us to talk and talk about how last week was, talk about things we feel we can do better this week, and just basically share ideas. And then we could also name a few pairs we're looking at, and then we go through them together. So please feel free to unmute yourself, please. Let's talk.
Good morning, sir.
Good morning. I can hear you.
Yeah, actually, I don't know. Should I say last week was having a kind of mix of good and bad. There were good
Okay.
trades and also there are some bad trades. But what I actually noticed is that last week actually deals with more of fundamental,
Okay.
from my own view, more of fundamental and less of the technical aspect also works also. It gives the exact time when it's going to happen, but I think it is more of the fundamental. So I don't know if there is a way you can also take us along in terms of the fundamental, then we know when to do it and when not to, because I'm very sure not every one of us, especially me, I'm not very, very good at that fundamental aspect. So it fogged me up big time last week. So that is something I actually noticed.
Okay, that's the first one, yeah? What else? What else did you say you noticed about last week?
There's nothing much though apart from that. Every other thing works well. Like for me, every other thing I think it's went well. That is just the reason I noticed.
Okay. Now, hi Joanna.
Hello, good morning.
Good morning, Joanna. How was your weekend?
My weekend was all right. I've just been looking at some pairs. My in terms of trading, my week last week wasn't so productive as I wanted it to be because I was not so consistent with following up my pairs. But I'm hoping to watch closely to do some pairs this week.
Oh, okay. That's great. At least we'll be able to look at some pairs you're looking at as well. So last week for me,
Sure.
Last week for me was very funny. It was in and out, because I wouldn't say I had any problem on my psychology last week. My psychology was apt last week, not towards until the end of the week. Now, I think that was my own major problem last week. Was they were fundamentals, true that, but they shouldn't have affected my peers in the manner in which they did. But at the end of the day, like we always say, the market is the market. It's going to do what it chooses to do at the end of the day, because we are nothing but just tiny sticks in a bunch of in a broom, in the bunch of a broom. There are bigger ones than us over there that make the things happen. But towards the end of last week, I suffered a bit with my psychology because I decided to trade volatility indexes, which is VIX. And I then realized that sometimes you could have a very strong mindset towards what you're going to go and do and everything. And then you would then realize that the market isn't just going to favor you in the manner in which you think it was. Like, but my analysis on everything on the pairs I was trading just seemed to be so apt. It fits my own fits my trading style, fits my strategy and everything. But then it wasn't just playing out. And then I kept making entries and getting stopped out. And at some point in time, I just couldn't stop making the entries. I just realized I just couldn't stop making the entries because it was too clean not to be true. I don't know if you've experienced that. You could see the perfect setup. Like, this is it. This is your edge. This is something that's played out so much. And it happens to the best of us. And it happens to me, sometimes too, a lot. But then I think that was one thing I suffered throughout last week. I ended last week with a loss on currency pairs outside. I ended last week with a drawdown. Now, I would want to blame myself that it was my fault. I should have taken profit when I had the profits, but I was aiming long term. I did take profits on the way, but I was aiming long term, and then I held my trades for too long. I knew when I should have stopped out, but I was looking at a possible reversal point that didn't hold at that point in time. But that when it was going to get there, I was too deep in losses already. So I just had to cut my losses. So I didn't cut my losses short last week. More like I cut them when they became too much. So this week I'm more in a recovery kind of phase to kind of make back what I lost last week and then go back into profit from there. So the major thing I'm doing this week on my own end in terms of risking is I'm cutting down my risks from the average 0.5% I use on my account. I'm dropping my risks to 0.2 to 0.25%. And I am basically targeting a 1 to 2 risk to reward. And I would be switching from long-term swing into intraday swings. So I'm not going to be holding my trades for more than a day or two this week. So anything on the second day, if it's not producing as much as I wanted to, I take whatever profits I've gotten and I move on with that. So that's my take on this week. Psychologically, this is the build up. I felt so bad. I even needed to cool off. So during the weekend, I think on Saturday, I did like a picnic sort of thing, just myself, and my friend. I just went there, looked at the charts a bit, just tried to like study and clear my mind, which is actually very healthy as a trader. Once in a while, you should do things like that where you could just like like decongest your head of the bads that have happened last week and then come into the week with a fresh mind. Okay. Patron, you said something.
Can I say something around? Yeah, sorry. No, I was just going to say, I totally agree with the approach of intraday swing, because as someone mentioned about fundamentals, I think like due to fundamentals, like there will be a lot of we're gonna have a lot of friction this week due to the news that's gonna come out, and the next 2 weeks is going to be quite essentials as well. Like me personally, I do follow up with the meetings that they usually come out with. So like reading from bank reports, because I do have access to bank reports. I've noticed that there will be a lot of friction. So in terms of swing trading, we should go for a less target, just like a tips.
Like just the normal intraday, a day or two, once you notice there's going to be like fundamentals in the market, you just kind of like secure whatever it is you've gotten so far. I think that was the mistake I made last week, because if I had paid more attention to intraday swings, I probably would have been able to secure more profits than I should have. And I noticed that due to the level of fundamentals in the market, in fact, it's more like during GBP USD, I was trading GBP USD on Friday, Then I think there was the Michigan State, I think was it housing sentiments or so. I can't remember, but I know it was Michigan, and it was supposed to be good for the USD, but all of a sudden it was good for a while, and then all of a sudden the USD became weaker again, and the pounds was like way overpowering it in terms of strength and everything. And I got so frustrated, I just exited the market with losses as well. I was trying to take like the last trade, which was supposed to be like 0.35 to target 1%, and I would be out, but it still didn't go as planned. So I was like, you know what, fuck this week already, and I was done with it. But like you said, let's focus more on, you know, into week trades kind of thing, just 2 days. And let's also try and keep track of every fundamentals that would be available in the market. I think that should be the first thing we do before we look, you know, dive into the charts as well this week. On Patreon, you said something. You said last week was more fundamentals. True that, and we're going to get a lot of fundamentals till middle of February. I feel it's because January, February is usually like the month where all the institutions are trying to like get their standings and their feet, you know, into the year properly. So they would tend to do a whole lot of, you know, meetings. They tend to want to balance the books and everything, so they have a good year starting out as well. So we should expect, you know, to be more profitable, honestly, towards March. I feel that's where most of the money is made in the market, March, April. There's a certain level of stability that comes in the market where the markets are trending and flowing properly. And even if you look through the cycles of the market, you know, you look at every quarter, the end of the first quarter is usually where the money starts flowing in properly. The end of the first quarter, which is around March, April. Then we go into the second quarter. Then when we get towards the end of the second quarter, that's when the market becomes very dubious. It gives you, and it takes it back. It does that a lot. And for some people, you know how to attack each cycle, each market cycle, when you've really studied the cycle. And for me, I wouldn't say I've done like the minimum of at least, you know, 3,000 to 5,000 hours studying cycles. Hopefully this year I would pay attention more to understanding how these market cycles work and how these banks and, you know, institutions and hedge funds actually use it to operate in the market. I think it's due to their sort of, you know, fiscal policies and whatsoever that they all have. So let's look at fundamentals as of what it's going to be given to us this week. So permit me to just open up my browser. Okay, so apparently I'm in full screen mode, sorry. Okay, so let's just put this here. Let's bring this forward here, okay. And okay, so let's look at Forex Factory. Let's use Forex Factory. I don't know which of the fundamentals or news outlets we use, but for me, I like Forex Factory because it's kind of, you know, just straightforward. And FX Street on my phone usually hangs. I don't know why. It was an update. So this week we have JPYs, we have CAD, we have NZD, we have AUD, we have all of them. But usually what I would do is I try to want to filter, you know, to just get the red folders and the orange folders, which are like, you know, very important or high impact and medium impact kind of news, so that you just kind of have an idea of where the market could just, you know, switch up and go crazy. So we have JPY monetary policy, which is still tentative until we get a date, probably by end of today. We would see probably a timing for that. So we have the monetary policy statement, we have their outlook, their Bank of Japan outlook report, we have their Bank of Japan press conference, which, and you know what monetary policies are, it's like the major things that the bank do, their fiscal and monetary policies is like what every financial institution looks forward to. The report that comes from their monetary and fiscal policies try to give like an overall outlook of what the economy of the country is going through at that point in time, what they think, you know, their inflation rate is, what the rate of their interest are going to be, and all of those things, just giving you like a major outlook of how their economy has been for a period of time. It's very, very important and crucial as well. Then on that same Tuesday in the night, we at 10:45 p.m., just at opening or the end of the Aussie session, we have the NZD CPI, Tuesday, 10:45 p.m. Sorry, if you're looking at the time, I don't know where you are, but this is in Nigerian time. So you probably might have to do like a time change on your own side so you can follow up. Then for the euro, we have the French flash manufacturing PMI, we have the flash service PMI, we have the German flash manufacturing PMI, we have the German flash service PMI as well. So we have news from France and we have from Germany as well. So 9 o'clock, 9:30, towards 10:30 as well. We have GBP as well. They have their flash manufacturing PMI as well. So these are a few of them. We also have CAD, their monetary policy reports and their rate statements. So like I said, we'll be able to find out what their inflation rate is going to be, what their interest rate is going to be, and all of those things. And I feel this news on Wednesday is what is going to fuel our Euro CAD. And until then, I'm still protecting Euro CAD. Like I said, when we go back to the chart, I am protecting Euro CAD just below, I think 1.86250. I'm protecting it at that level. Anything below that level, we probably might have to close out till maybe on Wednesday. We'll see how the build up before this monetary policy report and their rate statement comes out, and we'll try and see we have like a technical backing alongside it. Then we'll know if we should make an entry or not. But till now, I'm still watching it. Then on Thursday, we have main refinancing rates, monetary policy statement of the EU as a whole. Okay, so there's this thing, if you understand how the EU works, we have different countries in Europe, then we have like a conglomerate of all of them, which is under the body of the European Union. The EU has its bank on its own where these countries and co kind of like puts funds together to kind of like grow the whole EU as a whole kind of thing. They make loans and all of those things. So the EU has its own financing body as well. So they also do have their own news as well. Okay, so then on Friday we have news on the USD. Okay, we have USD news too on Thursday, which are medium impact, but don't ever overlook or underlook this medium impacts as well. They're very, very important, especially when you have an idea of what the news is all about. This is GDP price index. This is core durable goods orders. And I think this has to do more with their imports and exports in the US and durable goods orders. I think if we let's open it. Let's just open this so we kind of, yeah, that's another thing you can do. Open the folder so you have like an idea of what it is. So this is change in total volume of new purchase orders placed with the manufacturers of durable goods, excluding transportation items. So orders placed with manufacturers for durable goods. Now, you know, the US is not a production or a producing country. So most of their durable goods and everything are mostly imported. Okay, so that's why you see that there's an advanced GDP price index. So the GDP is like gross domestic, product of the country or pricing of the country. So it balances up what they import, what they export, what they've sold, and what they didn't sell, and all of those things make up a total of it. Now, usual effect, it says actual greater than forecast is good for currency. So if there were more durable goods, purchased and, imported, and profits were made off them, then it's good for the currency as well. Then same Thursday, we have the ECB press conference. Like I said, the European, community as a whole, the ECB press conference. So let's open that folder as well and see. The ECB president and vice president, more hawkish than expected is good for currency, scheduled 8 times per year, about 45 minutes after the minimum bid rate is announced. Okay, so we have to watch out for that. Then Friday is where we're going to see a lot more from the USD with the core PCE. This is a very, very important news for the dollar. The change in prices of goods and services purchased by consumers, excluding food and energy. So this would be in terms of their durable goods like, machines, cars, and whatever, and all that. They would now see if there's a difference in the pricing from last month and December to January, probably. Now, if there were more purchased goods and this thing, actual is definitely going to be better, for the currency. Better than forecast is another thing that I realized that most people tend to forget. You always need to look at this forecast. The actual could be greater than the previous, but if the forecast is greater than the actual, sometimes there's sort of like an imbalance during the news. So some people tend to look at actual greater than previous, and they'll be like, isn't this supposed to be this? But the forecast itself is what builds the sentiment around every trader, around your analysis and everything. So like we all know, I believe we were all taught that sentimental analysis is a combination of your technical analysis and your fundamental analysis that builds sentiment in the market around traders in the world. So the forecast is what, people have said it should be. Financial agencies have said, okay, this will probably be the result. And even some banks, some hedge funds and co would have hinted, that this is what they think it should be based off reports from last year and other data that have been released. They kind of have like an aggregate overview by financial analysts that states what they believe should be the present numbers. And so that alone builds the anticipation and sentiments around how the currency would move. So because of the forecast, a lot of people would have set orders due to sentiment, probably would have their buy stop orders, sell stop orders, buy limits and whatever. And sometimes that is what the market needs you to actually do, so that there would be enough liquidity trapped in the market before the news is actually released, and then the market does what it wants to do. So it needs the liquidity, and those who know what they are looking for, kind of thing. So this is, I think, majorly our outlook in terms of fundamentals this week. So we do need to be careful in general about anything fundamental. So with that being said, I don't know if anyone has anything to add or wants to say something or has a question. I think we can actually get to it. Joanna, sorry, I can't pronounce your name, but I'll try. Incubi Bekani. Hello, Joshua.
No, I don't have any question. I'm following, so I'm just looking at the Forex Factory here as well.
Oh, okay.
I personally use FX3 too. Forex Factory is nice to use though. It's easier to like watch as well.
Yeah, I feel it's just more simplified and straightforward than Forex Factory for me. Okay, so let's look at the charts. So we had CAD CHF last week, which would have been an awesome trade. Honestly, it would have been an awesome trade. Sorry, guys. Perks of being in Nigeria. So my power just went out. This is Africa, and this is what we go through. So probably have to wait till I'm able to put on my backup. Okay, so Just give me a moment, guys. Let me switch my screen. Let's share my screen. Can you guys see my screen now? Joanna, can you see my screen? Sorry, guys, I think I got disconnected. Can you guys hear me now? Patron, can you hear me?
I can hear you.
Okay. Okay. So let me share my screen again. Okay. Can we all see my screen now? I believe so. Okay. So CHF, we looked at CHF last week, just at the open of the week. But we were expecting it to probably come below this level first before going up. But then this area acted as a very valid support level for it. And it's finally pushed into this this level we identified. Okay, so we had a previous break of structure here at this level. We had a previous break of structure here at this level. And then we had prices floating with lots of buy-side liquidity at this level, a lot of sellers here and liquidity being trapped. Then we had this order block at the top here, which started the downward rolling to the downside before we started to see prices move back up. So we're expecting price to tap this level, which it has, but I'm still not, taking any trade yet. I want to get, this week is all about confirmations. I'm not making any aggressive entries this week. So I want to get an entry pattern before I come into any market, because I still see, areas above this level that convinces me that we probably could also have some sort of liquidity sweep. Yeah, could get a liquidity sweep just above that level. Yeah, before prices start to come back to the downside. Now, for me, if I start to get confirmation, like if we remember what I said, I think Patron here is my student, so he probably should remember this. Is we want to see a repetition of exactly the same pattern, which is like an entry system, where we want to see prices do this into a supply level, create a break of structure on the higher time frame, then come back to take out the previous swing low or the previous higher low. Then we have a return back into area of previous resistance, turn support, or if we're able to find a possible order block just above it that created the change of character, then we make our entry. Some, you might look at it sometimes as some sort of, heads and shoulders or whatnot, but the most important thing is that we need to see structure changing. Okay, so we want to see, for instance, this low is the most recent low that is created at the moment here. So we want to see prices do what? We want to see prices come into this level and eliminate this last low. And then we want to see that the prices do what? The prices pull back up Sorry, guys. So yeah, so back to what we're saying. I hope we can still see my screen, yeah? Okay. So we want to see this low taken out. Once the prices push into this area here, fail to break this area, come back to eliminate this previous low to give us some sort of change of character. Why I call it some sort of is because I don't identify here immediately as a change of character unless I find prices pull back into a supply, or a supply is created before this break of previous low. Then I would identify it as a change of character. Then I want to make entries, probably after prices have broken this low here, the second low. When I'm trying to be very conservative, when prices does this, then I would make an entry approach of this nature, my stop loss just above here, so that I can allow for any sort of liquidity creation or anything, and then target wherever I'm going to. So this will give me like a 22 to 25 pip stop loss sort of thing. And then from there, we then go forward. Now, if you want to be aggressive, you would want to make your entries just immediately after prices have tapped here, or you've sort of identified some sort of resistance at this point. Or you can scale lower to your lower time frame and try and identify the same pattern I just described, probably like maybe on your 5 minutes or your 3 minutes. And if you're able to get that, then that's good as well. Okay, sure. Let me just quickly look at the chart section. Okay, so that's that for CAD CHF. So I created a list while I was clearing my brain over the weekend, and I called it the money list. Okay, so I feel these are where most of my trades are going to come in. These are like, I have the normal red list, but this is the money where I feel there are a lot of opportunities, because they've all gotten to areas of interest for me. So I have GBP JPY here, and GBP JPY is at the resistance level right now. So I want to see how it plays out here. Remember, we said we are doing intraday trades this week, intraday swing. So a day or two and we're out of the market. So we had this resistance level here, and we've had like a sweep of liquidity just above it. Yeah. We've had a sweep of liquidity just above it. So I'm hoping to see if we would have prices close below. Someone said it's not seeing anything. How about now? Can you see anything now? If you can see anything now, can you let me know? Can you see my screen? Okay. So we have this level here. This was the low of last week, and this was the high of last week here. So we are within this range. Sorry, the close of the day of last week, sorry. So we are within this range right now today. So I want to see how prices would react in these two places here. So I want to see either prices coming back to sweep here, and then coming back to take out this low, and then pulling back in. Then I will take sales to target this level before going further. Now, why I'm targeting that level is because we had a support level here with series of, downtrend, right? The bearish break of structure here and all that. So we had like a triple bottom here. We had prices finally break out of this bearish structure here. And we had a break of structure here and the bearish move first, and we had a change of character, and prices never really came back to create a proper higher time frame bullish momentum sort of thing. So I'm looking to see prices come and clear out this area here that was left to tap into the other block and then a continuation of the bulls. So I'm hoping to see a bearish GBP. Hoping to see a bearish, JPY, bearish quote JPY this week, hopefully. But if we don't get that and we get a break out of this resistance at this level here, a solid break, not some sort of liquidity clear, then I would want to see prices pull back in to give us like some sort of retest of previous resistance turn support. Then we'll probably take bullish entries. But until we find that, this is my possible outlook for GBP JPY as well. So similarly, we have same sort of outlook that we have on GBP JPY. We have it as well on the Euro JPY. Okay. So last week I had this analysis on Euro JPY. I genuinely wanted us to have taken this trade, but it just never came back to this level. Instead, it stopped at this level here, which was a valid resistance level that should have turned support, but I was looking for some sort of deeper pull into a more discounted level, honestly, because from here, if we put our fib to this previous high here, 50% is valid. 61.8% gives me more confidence in making an entry based off the Fibonacci. And it just sort of stopped at the 50%, which is still, an okay area, and then started moving up. And we missed just the right amount of about 300 pips last week on Euro JPY. And sometimes I don't like to make entries after I have missed my initial entry. I just feel like anything that, just violates my initial idea of the amount of risk I'm willing to take on a trade and increases it for me, puts me on a losing side. So intentionally, I just don't take them. So now we have similar thing. Now let's look at why I'm calling that level a key level on Euro JPY. Okay. So yeah, on Euro JPY, we have this. So I think maybe I should do this on the daily. Yep. Yeah, so I know a lot of people don't like to consider wicks as break of structures. But I do sometimes, especially when it's on a higher time frame. And why I do is I believe that a wick on a higher time frame is most probably a candlestick on a lower time frame. So it can be valid for me on a higher time frame. So if we look at, let's say, the 4-hourly time frame, if we have a wick here on the 1 hour, it most likely is going to be a candlestick. Okay, and this is a result of wick break wick. So it's like, sweep the liquidity below here and moving to the upside. Now, just above here, we had where the start of the bearish move happened, which is here. This was where we broke that bullish character and prices started to move to the downside. And ever since then, prices haven't gone up here. So all I just saw was, bullish structure, but with areas of liquidity to come back to tap into this level and then sort of give us a pullback, a solid pullback before we continue the bullish move into this monthly area here. But like I said, and I would always say, I am no market magician or perfectionist. So I tend to look at the market as what it's presenting. So if it hasn't presented to me a reason to take this trade, I am still going to be watching because we have other possible areas of supply just above here and just above here as well. And probably prices might even just want to keep being bullish till it takes out this level. Now, the one thing I usually use is my RSI. And I normally would like to see my RSI in extreme areas like you have here when prices, broke the structure here. So I usually would want to see my RSI in extreme areas in terms of reversals. Like for instance, at this point in time, we're looking for a reversal. So I want to see my RSI in extreme areas. Okay, and on the daily, from the daily, we can see that we still haven't gotten to an extreme area yet on the daily, but we are just above the 50%, which is still signifying what bullish strength. So either ways, confirmation is vital. Because like I said, we still have areas of interest here, just above here would be a proper area to consider since it's on the daily. And it's just the daily candle that actually did, break the structure here to push prices to the downside. So this is very valid as well. But until we get areas in this, like smart money traders, we want to call it retail area of, double top and neckline sort of thing that we have on the 4 hours. If we don't get any sort of confirmation, here to actually kind of like take out this previous lows and go back to retest and show us signs of a downtrend, then I'm going to be staying out and instead wait for prices to break above here, give us a retest, a break and retest of previous resistance on support. Then we probably would want to make entries along with the trend and set our stop losses in a place where it is most suitable and comfortable for our risk appetite, just above here. But until then, let's just keep watching. I'm not going to want to rush into the market now because you could come in and or you could enter buys and need to sell. You could enter sells and need to buy. So this is a critical point for me, and I don't want to risk it because, like I said, my psychology this week in the market is what is more of a recovery mode. So I'm not going to be taking any aggressive entries or whatsoever on Euro JPY this week or on any pair at all. Even if the pair has my father's name as the base currency, I'm still not going to get aggressive into it. But yeah, that's that for Euro JPY. Then GBP USD. GBP USD has been frustrating. We've been waiting for this level for 2 weeks and it still hasn't come into this level. Now, last week I took this trade. I was hoping for it to sell and it went back up and it finally, has had a deep pull into this area of interest that I had here and it looks like it's selling. So for GBP USD, I might be making an entry, but not aggressive as well. So I'm going to be using what I call a momentum system entry. Okay. Now, the momentum system entry for me now is I want to see 2 consecutive high value candles or momentum candles for the sells on GBP USD. So I want this to close as a bearish engulfing. That's one. Then I want to see another bearish candle that has very huge momentum come into the market again. And then when it does that, then I would then scale to the lower time frame and look for a bearish structure within those 2 candles. So why those two momentum candles are important for me is because if they eventually happen on the 4-hourly time frame, they ought to take out these previous lows. And if they do, then I'll have a pullback to confirm that we've cleared this bullish move. So let me just take out this supposed channel that I drew last week. Okay, means that I would have taken out this bullish move and then I'll wait for it to pull back in, then I take the sells again. So sells on GBP USD valid, but until it gives me confirmation. I'm all about confirmations this week. I am all about confirmations this week. That's the only thing I'm trading. No confirmations, no entry, no aggressive entry. I keep saying this on the call, but you guys might not understand it. Is sometimes you need to self-talk your mind to remind yourself. So the more I say it, the more I'm reminding myself as well. So bear with me, but no confirmations, no entry, no aggressive entry. So I just have to keep telling myself that it works for me. And if you actually do practice it, the more you say certain things, the more it sticks in the upstairs there. Okay, so let's just I'm willing to stay out. This is a whole lot of pips that someone might have made. And sure, you can't make money at the same time with everybody in the market. It's the market, you make it at your own time. So sure, this is going to be a whole lot of money to watch past me. But I know for once, price is going to definitely come back and I'll make my own entry. But for me, this is where the biggest money lies. That's where the biggest money lies, on this place. Because all of this sellers here, everybody putting stop losses and everything here, definitely has to go. There's too much money here for the market to waste it. It has to go. So for a fact, I'm waiting for these buys and I'm going to be a part of this money by the special grace of God. Okay, so I think those are just the only pairs I have set out for this week. They are the areas of interest for me. Okay, so GBP USD, GBP JPY, CAD CHF, Euro JPY. So those are like my major pairs in terms of outlook for this week. Then pairs from last week that we're still watching is Euro CAD. Okay, so see, Euro CAD is pulling back down to this level. Okay, and anything that makes it break this level, I'm out. Like I said, anything below 1.446250 and prices stays below 1.46250, I'm out. And we're at that point in time. So you guys would be expecting me to call an out on Euro CAD very soon, because this pattern is very funny. It could happen like this and come back to sweep here before moving up. So anything below 1.46250, guys, I would call Euro CAD out, and I think we would be taking a loss of, I think we made entries here. We'll be taking a loss of 80 pips, okay, which is actually fair. And remember, I said my initial stops were under here at about 100 and something, 150 pips. Like I said, now this has allowed me to kind of like gauge the market to know that, okay, this isn't playing out anytime soon. Okay, so we need to step out of the market. So like this 4-hour candle closes in 8 minutes. Let's see if we're going to get a rejection on it. Could happen, or it's going to close bearish. And if it closes bearish, I'll call an out on Euro CAD, and then we'll wait till Euro CAD presents us, more valid reasons to want to go bullish on it. Okay, let us not be trapped in the idea of wanting to hold the trade in loss, because as of now, it has started to shift bearish. Okay, so that's that on my own side for this week. So guys, what's up? What charts do you think we should look at? Joanna, Patron, Joshua, what pairs are you guys looking at this week? And I see nobody came with their tea.
I actually have my tea here though. But me personally, yeah, I'm personally watching out for Eurocad as well. GBP JPY, NASDAQ, for now. And yeah, NZD, JPY is interesting as well. Like the Kiwi pairs. I used to trade the Kiwi pairs a lot, but I'm trying to get back into it. So I just want to see how they move. But I'm looking at those pairs for now.
Okay.
Yeah.
Would you want to share your screen with us?
Yeah, I would have to, because I'm using my phone right now.
Oh, okay.
Yeah, but I could try. If you give me a moment, I'll try to like connect somehow. Give me a moment.
All right then. How about you, Patron? What are you looking at this week?
I have a quick question, sir.
Yeah, please go ahead.
No, I can say you are a pro trader and you've got a lot of experience about the market structure, the patterns, how it moves. And
yeah,
me on the other way, I am just a newbie just coming into the market, into the business, and I've not done much. So how can you actually work against this thing? You are having a strategy, a setup rather.
Yeah.
Okay, this is how the market is supposed to move. Then we are actually have to confess I'm actually in a lot of forest group, and then you see 2, 3, 4, 5 setups that are actually against yours. I don't know if you understand what I'm trying to say.
I do understand.
You have your own setup, then and you are seeing 3, 4 that are actually going against what you think. And at the long run, what you actually propose is what is coming out. How do you think you can deal with it? Like, it has happened to me twice. Even right now, it's actually happening to me because I'm in a trade right now. But I'm out already. This GU. I was in GU this morning. I'm actually on 20 pips already. Then I saw 3, 4 strategy that was saying, or setup that was saying buy. Then I just try to close my 20 pips and profit, and I just opt out. So I won't short what I have already. So what advice do you have? Like, how can I actually deal with that?
Okay. So the one thing that you need to keep in mind as a trader is there are always going to be different views in the market. And now it's not because of anything, but just for the sole reason that 4 eyes can't see one thing the same way. I don't know if you heard that adage before. 4 eyes can't see one thing the same way. And it's due to the reason that it can come as a result of the eyesight problem or the mind problem. So it could be your insight or your eyesight, either one of them. But in trading, it's insight and eyesight together. So when I mean insight is there's a reason why the person is seeing what he's seeing mentally. It could be from what he knows or what he doesn't know. Like sometimes I see a lot of traders, I don't like to use this word, but let's say retail traders, because they don't believe in the whole smart money concept. They believe in their normal brick and retest theorem and all of those things. So for them, what they actually might be seeing, it's not that it's wrong, it's that it might not be sustainable over a time. It might not be sustainable over a time. Take, for instance, someone who was seeing steady bulls without consideration of this market could actually U-turn would constantly be looking for buys on this Euro card. But for me now, I've told you I've seen a possible U-turn in this if prices break below this level. Now that's my own insight in the market. I understand the use of my key levels. Now, if you stay too much with people who have different views, you would never be able to make use of your own analysis because you're going to be scared that everything other people do contradict yours. Now, as a trader, you need to grow into a level of discipline and confidence where you believe in what you see, not just what every other person says or see. Now, it's important to like to pay attention to what generally the sentiment of the market is. But at the same time, if you doubt your own analysis too much, you would never be able to take or execute your trades, because the first killer to execution is doubt. And once doubt comes in, if you were in last week's therapy room on Twitter Space, I spoke about fear. And one thing doubt does is it builds fear. So the moment you look at too many people's idea and everything whatnot, it builds doubt in your analysis and you would never be able to execute. And once you can't execute, it's now caused as a result of what? Fear. So that doubt has put fear in you. And now just look at you now. GBP USD is selling, but you've run from the trade already because why? You went and you saw a bunch of people saying buys and buys and buys. Now, the most important thing for you as a trader is what is your why? Why were you selling GBP USD? If your why supersedes every other thing, then stay on that trade. For me, I would rather take a losing trade than bitch out of a trade because another person says he's going to buy. If he buys and I hit stop loss when I'm selling, no problem. It was my trade. That's how I built confidence in myself. As a trader, you need to build that confidence in yourself. So if I'm on a trade and someone else says, I can see 5 other people saying he's a buyer, whatever. Trust me, between all of us individual traders using our MetaTrader 4 and 5, we don't have enough money to actually push the market in whatever direction it wants to go to. So if you see 1,000 people saying this thing is going to buy, trust me, they don't have the liquidity enough to actually force that market to buy. So if you're seeing sell, stay with yourselves. There are 1,000 buys they click, can't do shit in the market. It can't do nothing in the market. So if you're on your sell, stay on your sells. If you hit your stop loss, fine. It was just one trade. You're definitely going to get another trade to make your entries. So my best advice for you will be cut down on all those Forex groups. If you're going to stay in a Forex group, have a few people that you look out for their analysis generally. And you know that they look at the market in line with how you look at the market. Because if you have too many conflicting ideas, then you have no idea. You understand? So have a few people, maybe 1, 2, 3 people that you know these guys are actually good. And when they analyze the market, it kind of flows in line with how you view the market. Then stay with them. So they should help you be like some sort of I won't say, let's say confirmation, but at the same time, the analysis should help you check and balance yours. But at the end of the day, your conviction as a trader for yourself is what makes your trading experience important and different. So reduce on this person said is buy, that person said is sell. I'll give you an example. Last week, my indices trade for the week was US 30, but I was paying attention to someone's NASDAQ, and NASDAQ ended up messing with me. I would have taken profits off my US 30 faster than I would have taken on my NASDAQ, because my US 30 gave me reasons to see why and when it was about to stop selling. I could see the reversal and turning point, but on NASDAQ, it wasn't giving me nothing. Instead, it kept giving me signs of, I'm just going for a pullback and I'll be back down. And that was it. So pay attention to your own trades. They're very important if you want to be a trader for yourself. Except you want to be using signals and other people's analysis, and then you would end up just like them, blowing accounts every day and losing money every day.
All right, sir. Thank you very much, sir. Thank you.
No problem. So, Joshua, you said you're watching out for GBP JPY to sell after the break of structure, which is valid, same as mine, and GBP USD to reach your POI, your point of interest. So I just want to ask, on your GBP USD, can you tell me the exact pricing for your point of interest?
Okay, let me check.
And I was going to say something, Patron. Another reason why, I've seen a reason why some people might be telling you to buy is because they consider this last low as a sweep of this liquidity. But trading sweeps of liquidity sometimes, I don't see them as long term. I see them more of short term. Okay, I see them more of short term. So this was a possible buy. If it continues buying, that's good. But for me, when I map out such liquidities with huge or several number of touch and prices coming back to them severally, what I tend to do is I want to look for the demand itself. So this as a liquidity sweep for a smaller time frame kind of trade, very valid. And prices actually did respect it and went back up. Now they have already started to identify here as a bullish, as a bullish character. But I can't find bullish characters if I've not seen a change of what my bearish character. And my own bearish character is above here. This is where my bearish character is. So until prices sweeps this bearish character, I won't consider this bullish yet, because I'm still bearish. Sell, sell, continuation of sales until we get here, then I'll start to consider buy. So for me, I'll map this out here again as I just don't want to leave too much markings. But here again, another possible inducement, because they need to be a lot of money to activate this order. This order looks, you can see the push that happened. This order looks very strong. So they need to be a lot of money. But until then, like I said, confirmations on GBP USD, we need to take out this minor time frame sort of bullish sentiment here and then go back before we come back in. So Joshua, yeah, what pricing did you say is your POI? Is it a bearish POI or a bullish POI?
That's the bullish POI, the same as yours.
Okay, bullish POI.
Can you hear me?
Yeah, I can hear you.
I'm waiting for the trades in the last week to drop down to that POI.
Yeah.
So, but it hasn't, so I'm still waiting.
I believe this week should bring it down because we have a lot of fundamentals this week. We have GBP and you know all the ones we looked at. So hopefully.
That's what I'm watching out for, because I don't trade too much currency like that. I only trade pound yen, pound dollar, and gold. So that's it.
That's good. That's good. Having a few pairs you look at is also vital as well. It helps you reduce the noise and then keeps you away from the chart from making bad trading decisions.
Ryan, I was having some issues connecting the Zoom on my laptop. I was wondering if anyone has the same problem with the link, like if you press the link on your laptop, if you're using the laptop.
Yeah. It's not working on the
like
laptop.
No, like it's not coming up. Like I'm in the group now and I'm trying to press the. I was wondering if anyone else, because right now I'm talking through the phone. I logged out of the phone and I'm trying to log into the laptop, but it's not coming up.
Okay, let me see if I can copy the link again. And
maybe you can, if you can copy and just send it to me privately or something. Yeah.
So let me send it to you on. So I just sent it to you on Telegram again, so you could check.
Yeah. Okay, let me see. Okay, so guys, you guys gonna see like this one screen with your names and the other screen is with the trading view because I don't know what's going on. So, okay. Anyways, okay.
Okay. Yeah, we can now.
Yeah. Okay. All right. Okay. Sorry for the mess, guys, like all of this, but let me just go through. So like I mentioned, yeah, Ryan, I'm looking at NASDAQ. So this NASDAQ thing has been on my neck since November because I've been watching it and I did take some trades while it was moving, but I missed out on some moves. So currently, from the weekly perspective, we have reached a level that is quite, I would say, quite crucial, due to the bullish sentiment that's been it's been all the way since what, like January of this month, no, of last year. So I can see that price is still going to go higher. I did early in November anticipate around this level, around 17,000, and he has reached that area. Now, going to the daily target or daily time frame, I'm seeing that price will continue its bullish momentum, but I believe price will drop around this level. Let me draw it. I'm just going to be quick, guys. So this is just like a sketch. So basically, the daily time frame is showing bullish momentum, right? So for me to even consider taking a trade, I will want to see a break of structure, right? So my break of structure is a bit different than the break of structure that Ryan is having on his chart. So basically, when I want to look at the break of structure, I look at candle bodies, right? So I want to make sure that there are normal price market structure, higher high, high lows, and then a break of previous low or previous high. So in this area, we can see that price has privileged. They had the high, 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 low, high, high, and price rejected to the downside, right? Breaking this level, right? So that was a short-term downtrend before continuing the uptrend. So now, this being one leg, I'm now watching this leg, right? Being a new leg, going to the upside, then going to the downside and creating a new high. Now, what I want to see overall is for price to push back down, right? Because I want basically liquidity on the lower time frame. This is just a sketch, guys. On this area, I believe it was on the 1 hour and 4 hour. I want price to come back down, take out this area. Possibly, if this area is getting rejected, then I will look at the level around 1600 again, right? Around 1620 something. But I believe price will come down here. And if price do close with a full candle body below this area here, I will look closer to go for a short-term bearish momentum move, right? But for now, since I'm seeing price going higher and higher up, right now price is kind of like, I don't want to touch NASDAQ for now. It's like in any man's land. Like, I don't want to touch it. I want to see a structure. Okay, I want to see a specific structure. Anything happens here. So on the 4 hour, basically I'm a swing trader too, so I do watch the 1 hour and the 4 hour. Now the 4 hour has to align with the 1 hour, meaning that if the 1 hour breaks, 4 hour has to break, right? That's a criteria for me to trade. So if I do see something like this on the 4 hour, right, then I want to see the same thing. I want to see the same thing on the 1 hour, price breaking to the downside. When price is breaking to the downside, I will then look for my entry criteria below here. All right, I'm just drawing below here, right? So when price reach one of those levels on the 15 minutes or the 1 hour, I will then take my continuation to the upside. So I'm just waiting for something like that to happen. So for now, I'm not touching NASDAQ, okay? So, but I am bullish on NASDAQ. I'm very bullish on NASDAQ. I'm just expecting a bearish move to happen first. So on GBP JPY, guys, I have not drawn out anything. I'm gonna do that later. Sorry. So on GBP JPY, on the weekly, we can see that price has created a very significant push to the upside, right, on the weekly. So wait, let me check the monthly. I only check the monthly at the end of each month, really, but just to like see where price is currently at. Then I go to the weekly time frame. I'm trying to understand, because right now, like, I believe that this area here, this area being a weekly level, as well as the daily, I believe.
As well as the daily and the monthly.
You can call this, yeah, exactly. So it's like it correlates a lot with perspective of having rejections on this area, like price supporting this area quite strongly. So in that case, for now, it seems like, okay, price might reject this area, so that we'll see a bearish sentiment approaching, right? But there's also another factor I put in mind here. I put in mind the Japanese yen. In terms of fundamentals, so the Bank of Japan has for the last two and a half months, they have increased their interest rate, and they have also adjusted their rate slightly to be more to be more, you can in a simpler term, to be more bearish, right? Which is good, because that supports our view on GBP JPY possibly going into a bearish sentiment. So GBP JPY, you can say that GBP itself, I believe GBP right now is in a, Rion, would you say GBP is in a risk, like a safe haven session right now? Would you say
the problem,
that, like?
No, I wouldn't say that, because I feel the GBP has a lot of strength now. So it's not really looking to dump into any safe haven, unless the JPY proves to be extremely stronger than most currencies. So that's why their statement at the end of tomorrow, or at the start of tomorrow, is going to be very vital for them. Now, considering the fact that we have a correlation between the monthly highs, the weekly high, and daily high, gives me a certain fear and sentiment. Now, I usually have a problem. Why I call them psychological levels is because there's a whole lot of sentiment and psychology around them. So most traders around the world at this point and in this moment are looking to want to short JPYs, meaning that there's good enough amount of money just above those highs. And I feel like that particular candle we're seeing now is probably not enough liquidity that was swept at that point. So I feel they probably would need to push prices up above that level to create some sort of bullish trap, then dump the market.
Then dump. Yeah, exactly, right? Because right now, seeing it is